Hi and welcome to DNB Carnegie in our presentation of Terranor. My name is Markus Almerud. I'm an analyst here at the bank. So Terranor is a road maintenance provider in Sweden, Finland and Denmark. We have a fair value range of 30 to 45 Swedish krona. 90% of sales is to state and municipalities, so the customer base is very stable. 3 points. Firstly, it is focused only on road maintenance. This has allowed it to build a very focused and disciplined, numbers-driven tendering process. It is a disruptor. It's tendering on all contracts out in the market, and the strategy has been working. It's gaining market share, and it's doing it at higher profitability. Secondly, this is a play in the maintenance deficit. Sweden in particular has built a huge deficit over time, and to take care of this deficit, the government has approved a substantial increase in the budget. Thirdly and finally, the company has entered a new phase. After 2022, when it built a portfolio, it is focusing on profitability, and we expect for the margin to keep rising over the next few years. We expect over 25% EBITA CAGR in the next 3 years. A little bit on what they do. So they take care of everything on and around the roads. Looking at the customer base, as we said, 90% of all sales are to state and municipalities. The Swedish Trafikverket is the largest customer. Contracts are large, they're long, and there is an open bid process for all contracts, which make it important to be good at tendering, both to win contract and to protect profitability. A little bit on the market. The Swedish market, which is where Terranor focuses, grows by 6% per year in the coming 5 years. Looking at the numbers, it has a target to grow sales by 8% per year, which means that the company expects to continue to gain market share. We pencil in 7% sales CAGR in the next 3 years. Momentum is good. Momentum in orders, as you can see on the bottom right-hand corner, is improving. The margin, it has a margin target of 5%, which we think is reachable. We expect the margin to keep expanding, to expand gradually in coming years as old contracts expire and the new ones start to have an impact. In terms of valuation, Terranor's peer group is trading at EBITA of 10 times on 2026. Terranor is at 5 times, so valuation is undemanding. So in summary, Terranor is a disruptor in road maintenance. It's good at tendering, it's gaining market share, and is doing it with high profitability. We see over 25% EBITA CAGR for the coming 3 years, and is trading at 5 times EBITA for 2026. Thank you.